buying the same company in the midst of uncertainty and volatility where sentiments are down, I'm buying it at a discount. This is where the differentiation happens. It's not that, I'm going to be scared it's going to go down and going down further. Why? Because again, I am a net earner. At that particular time, being a net earner just means you can have money to invest on a monthly or a quarterly basis.
Okay guys, in this video, we have a very special treat. Your favorite CEO of Rapper and Soldivo, Rex Mendoza. First question, a lot of people got so excited. You buying Jollibee at the IPO around 10 pesos, then your story about PLDT at 6 pesos, then you mentioned that it dropped and you bought even more. When you were losing the money, did it ever occur to you that at 6 pesos, should I cut my losses and then just come back? Or what gave you the conviction also to just stay the course, add, and just invest for the future?
I'm not going to be a technician. I'm not really going to be an all-astute fund manager. I really want to make things simple, especially for my own portfolio. Yes, I got scared. Who's not going to be scared thinking about losing half of his money? It's just that when you're in that particular mode, you have to look at, why are you investing in the first place? So again, it all boils down to the objectives that you have at that particular time. I know I'm saving up for retirement, I'm saving up for capital for business, I'm saving up for many long-term objectives. So the drop was not really something I need to focus on. I need to focus on how will I make those long-term objectives happen? How will I hit them? How will I achieve them? In which case, it changes a perspective. Which means at that particular time, I was looking at a bargain. I was looking at buying the same company in the midst of uncertainty and volatility where sentiments are down, I'm buying it at a discount. This is where the differentiation happens. It's not that, I'm going to be scared it's going to go down and going down further. Why? Because again, I am a net earner. At that particular time, being a net earner just means you can have money to invest on a monthly or a quarterly basis. So who cares if it goes down? If I believe in a company, if it's run by good management, it has a great product, and at that particular time, all of these names, PLDT, Ayala Land, Jollibee, they have franchises. They have a hold of their markets, which means matter of time when the sentiment changes, it will become a very different ballgame. And true enough, in less than 10 years, it has happened. And, those investments never look back. So whenever these things happen to me right now, like what's happening today, and I think all of you are asking about that because of what's happening today, I'll just look at what do I need the money for? Why am I investing in the first place? When you look back at your objectives, then you change in terms of, focus from the fear. It now becomes an opportunity.
What's your advice for them to temper their emotions? Because at that very moment, it becomes very scary to see especially now it's online. Unlike before, you get statements, don't see it daily. And now you get to see what's happening to your portfolio on a daily basis.
It has to be a matter of how you view that stock portfolio. Yes, it's gonna look all red, and I guess even the color sometimes give you a certain sense of psychology, right? A certain sense of negative attachment. But the truth is this, it's a scoreboard. The question I'll always get to ask myself is the game ended or is it ending? No, it's a continuous game, right? It's a continuous game that you need to play, which means that you have to look at these numbers as a basic scoreboard. And maybe as of the interim, which might be the first quarter or the second quarter of this game, you're losing money. But if you are in that selection process that is sound, where you see good value, most importantly, that you've created a diversified portfolio and you're still earning more than what you spend. With all of these combinations, that provides strength, that provides the confidence. And I guess that's what you get down to, Marvin. You always get the confidence from within. Always remember that.
What's your take naman for people trying to say na, I'll wait first, it's gonna go down even lower, it's gonna go down even lower. There are people naman who have cash, are unaffected by the drop, but they keep on waiting for that bottom.
In all the 3 decades or more that I've been investing in stocks, I never caught the bottom. I never caught the top in terms of selling at the right time or buying at the right time. All I know is that at a certain price, it now has value that's compelling enough. At this age and time, I'm still a net earner, which means if it goes down to 45, I'll buy more. If it goes down to 44, I'll buy more. I will always have to allocate money to it on a monthly or a quarterly basis. So I'm not gonna wait for it to hit a certain target. I'm getting into it as I see value over time.
For those who are investing in stocks and then they get too emotional, when do they say it's time to pull the plug and just go to managed funds, just go to mutual funds?
For me, it's even the other way around, Marvin. They have to start with managed funds. Get the feel, get the emotional ride, get the volatility. In fact, it's already controlled because you have a fund manager. But at the very least, you start feeling the market. Now, if you're used to it and you now have a bigger base, and you now have better acumen, that's the time you start investing directly. You don't expose yourself to the market and try to become bulletproof. And when you get hit and you feel so bad, that's the time you go to a mutual fund. That's the wrong way. You start with funds. If you become more comfortable and you feel that you're, less vulnerable, that's the time you go into direct stock investing. That's what I feel. And there's nothing wrong with having both though. I mean, up till today, I'm investing my own portfolio, but I still bet on other people's prowess in fund management. I'm investing in managed funds as well as direct stock. So for me, it's always a combination. It's diversified. I cannot watch the market all the time. So I think fund managers can do better than me at certain times. But I'd also like to be able to dabble directly because, I have the experience, I have the knowledge. Why not?
When you're at a position that you're losing money, and this is regardless if it's funds or stocks, we all know that it's a paper loss. What if naman wala ka ng bala? Kasi a couple of questions. Do you suggest that they have current positions that are winning? Do they sell that to buy the one that's lower? Or do they try to get off other investments that might be fixed income and then transfer it to the one that's lower? They just stay put.
See, I always tell myself one thing. If I'm about to sell something, the question that lingers in my head will always be this: where will I put that money? Unless I have a place or an instrument that will beat that position as it's currently doing, I won't move it. If I cannot see something that will beat it, I won't move it. It will stay with the winner until I will find a new winner. Number two, that shouldn't be a situation for many of you, that you run out of what to invest. And that's why I always say firing on all cylinders, right? You have to increase your income potential. You have to get into many things, side hustles, stuff like that, so that you will always have what we call net money to invest. If you're a net earner, your job is to allocate. Your job is to be able to invest. You don't exactly just have enough for your expenses. That's not the way to deal with it. Every particular moment, there has to be some extra there that you can position.
Do they touch their fixed income or leave the fixed income to where it is and then they don't move it to stocks anymore?
Fixed income drops to a very necessary level when the markets are bad. For me, it has to be a determination of how much that emergency fund should be. Now, when markets are up, we can do a bit of top slicing so you create more fixed income. But when the markets are bad and opportunities abound, that's the time to keep yourself within an emergency fund that is really, the nuts and bolts of it, an emergency fund. Because putting more money other than what's necessary will be, losing value. And that's the reason why, my fixed income will always be at a minimum when markets are going to be challenged.
For those who want to know more about Ramver and Saldivo, I'll put the link below as well for those who want to dabble into mutual funds. That's it for now. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. Bye, everyone.